Alrighty, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. So let's get started. We've got obviously we want to get all of our analysis done ahead of non-farm payroll. Hope you guys are ready for it. I'm going to give you the quick down and dirty version of the talk that we had yesterday in case you weren't around. I think it was during the Lunch Money webinar where we had this conversation. Look, I don't think there's much of an edge today, as far as the dollar goes. I do believe that the dollar is very pivotal. I believe that today we are going to, we're going to know a lot more about where the dollar is going probably over the next week or two, following the non-farm payrolls. But it's very much like a lottery to me, and I'm not one that plays the lottery. I don't do the lottery unless I'm high pressured by my family to buy a couple of tickets just because it's some ridiculous amount. But I always look at people play the lottery and go, man, you guys are just wasting your money. It's just such a tax on the average person, and in the forex market, NFP, especially days like today, unless you got positioned, which I still kind of kick myself in the ass for not being long the dollar Swiss from 2 weeks ago at 96.10. Unless you're in a position where you have a nice profitable trade, like let's say you bought the euro, yesterday at 111.20, and you're like, okay, well, I'm gonna let it ride out. Or if you're short the euro from 113, you're like, all right, well, I'm just gonna let it ride out, and you've taken some profits and you're looking to just see if the number is gonna push in your direction. That's fine, but to establish a new position right now ahead of the NFP doesn't make any sense. I closed out Kiwi short yesterday at 75. I closed my Aussie short at 46, I think, and then I closed my what else was I trading? I think I was shorting I short the euro at 94, and I closed that out at like 88 or something. Really close to every prices that we're at right now, and I closed out everything and yesterday afternoon, before the end of the session, and that was it. Like I said, I don't think there's much of an edge today. I do believe that the dollar is going to give us a really good indication of what's going, or that gold's going to help confirm which direction the dollar is going, and I think that there's a couple of clean trades out there, like the dollar yen, but we have to wait to see what the market's going to do. And I'm not, not very confident of being long or short, so I have like no dollar exposure right now, just so you all know. All right, so let's go to the euro dollar, and like I said, there's, unless you bought the euro yesterday, down here like 111.30 or 111, 20 or whatever, unless you got the euro long from down here, or you're short from up here, I don't think there's any reason to be having any dollar exposure at the moment. And this is going to be pretty key. I mean, we can obviously look at this chart now and go, okay, well, we know where our boundaries are. It's obvious at this stage in the game. All right, so our boundaries are really simple. We have support here at 111.25, we can say, or even 111.20, and the resistance is here at 112. 112.10. Right, that's it. That's it. Okay. Now, look, I wouldn't mind buying or selling the euro today. What I'm more excited about doing is shorting the euro or playing in the dollar strength. And let me tell you the reason why. Now, let me write down these numbers really fast. But the reason why I'd be more excited about playing in the dollar strength is simply because I think yesterday shook out a lot of dollar longs. That weak ISM number, which was weak, by the way, it was extremely weak. I think that, let me just type these numbers in really quick. 111.20, 112.10. Okay. Let's just put in a range today because we've come down enough to back into the range just for today. All right, until we can identify which way the market's going to go here. Like I said, I think that or like I was going to say, I'd like to play into dollar strength because I think this here yesterday and that weak ISM, which by the way was in contractionary, it was in a contractionary read, below 50, and that freaked out a lot of dollar longs. And so if we have like a ridiculously strong jobs report today, like we post a 220, 230,000 jobs, I think the euro is going to slam right back through this support right here and quite possibly back down to 110. All right, so because it now shook out a lot of traders, because if you think about it, you go, okay, well, we just retraced almost 38% retracement from the highs here. We may have a continuation lower. Even if you go from here, you go, that was a 38% retracement. Then we have a continuation possibly lower that looks like this. It looks like a flag pattern. So I'd actually, I'd rather play into dollar strength today, like a really strong number. I'd like to short the euro and look for a move below 111.20 eventually. Maybe today, maybe going in early next week. But we're not guaranteed that by any stretch of the means. Okay. I keep going back to what Mark Chandler said about August numbers for the last 5 years have been just. And by the way, if I keep yawning, I could not sleep last night. It took me like 2.5 hours to get to sleep, which I don't know why. I can't figure out why last night. Anyway, so there's the euro. Okay, and if it's dollar weakness, then we're probably going to see a move back higher into the euro, back towards 113, and then we can look to short it sometime next week. As long as it's not too weak of a number. If it comes in 150,000, maybe the euro will clip these highs and make it up towards 113 going into next week. Let's go into the cable. So the cable, I think we have to redraw the cable now. I think we've got this. This triangle, right? You can say, oh, Blake, we're broken out. I'm like, are we? Are we really? I mean, maybe we are, maybe we aren't. If you look at the tip, we're actually still holding. You know what I mean? So. I don't know if we've actually broken just yet. I know a lot of you that are dollar bears are out there are probably like, yeah, man, won't just the dollar just die? But it won't. It hasn't. Perhaps we are just pushed up to brief new highs here, just enough to stop out anybody who was short, and are about ready to turn back around and head back to 130. If we have a strong number today, why wouldn't we? Okay. So resistance today obviously is the high from yesterday, 133. What was that, 15? 133.17. I'm going to write down 133.20. That's key resistance. And by the way, this is also key resistance, and this is also key resistance. And frankly, I think it's still bearish, you know, while it's below 135. But yeah, we get outside of this 133.20, then we'll switch to range. Okay. Now support, if it's a strong number and the pound starts to just roll back over because now it's squeezed out some shorts, you know, we've squeezed out a good amount of shorts yesterday. We roll back over, you know, how far are we going to come down? That's the next question, right? I assume we're going to find some support down here at 131.60. Okay, let's go over to the Swissy. Okay, that was me yawning. All right, Swissy. So now this is probably one of the cleanest. Look at how clean that is. Here, let's remove that. I think that's the longer term one that we had drawn out there. Look how clean this channel is. You know what that means? Yeah, let's get rid of that too. Look at how clean that is. Here, let's delete. Let's remove that and let's do this. How clean is that? Super duper clean, right? So what does that mean? Well, what that means is if we break those highs from yesterday, this thing is gone. Now, the risk reward is to be short the dollar Swiss. You guys know how I do not like buying Swiss francs. So I will not participate. I personally will not participate in this move if it goes down. But if it breaks higher, that thing's, you know, going to take off. Now, one of the things that you may not have noticed, but we pointed out yesterday, we actually have made a higher low. Okay? And we're consistently making higher lows. And so that pressure is building for a possible break. That's why I'm saying that if it breaks, it's gone. It's the dynamics of this currency pair have changed back to being pretty bullish. Now, that would take a very strong jobs report today. We would have to have a very strong jobs report. Stephen, Sully, did you really just ask why I don't like being long the Swiss franc? So, seriously? Seriously? I'm going to go have to whack my head up against a wall. Like, I have to whack my head against the wall like 1,000 times because you just asked me that question. Breathe, Blake. In through the nose. Out through the mouth. Okay, let's continue. I'm not going to even answer that today, Sully. I'm just not. All right, if I have to explain that concept one more time, I'm going to literally strangle somebody. The Swiss National Bank has their interest rates at negative three-quarter basis point to make it literally impossible for any institution to hold Swiss francs long. If you are in a world that is starved by yield, starved, like it's impossible for funds, for mutual funds, for hedge funds to make even acquire something close to what the stock market is trying to return. That means it forces them, they can't be long Swiss francs. It's like the last place they would ever want to be long. If I'm a hedge fund and I'm having a hard time making 2% annually, the last thing I'm going to ever do is stick my money in at the Swiss National Bank that they charge me three-quarter basis points annually. Then I am literally underperforming everybody by three-quarter basis points. And when I can't even make 2% annual, and that is like, there's no way on God's green earth I'm ever going to own the Swiss franc. That's why I, as an individual investor, have a very difficult time doing that. Now, there will be periods where people run into the Swiss franc when they get scared out of their pants, but every dip where the Swiss franc strengthens and every dip in the dollar Swiss, the reason why people buy it is because no one can stay long the Swiss franc more than a couple of days, because it hurts their balance sheet too much. Yeah, I know yen has a negative yield, but it's only like it's only a quarter basis point. It's three-quarter basis point. Okay, if you only make 2% annually, how can you hold Swiss francs? I can justify saying, okay, well, I'll hold the yen a little bit because at least the BOJ is only charging me a quarter basis point, but the Swiss National Bank three-quarter basis point? Are you kidding me? Sully says that's what the S&B wants. No shit. No shit. That's why you don't do it. Damn. All right, I'm moving on. Jesus Christmas. All right. Dollar yen. Exactly. You answered your own damn question. What the fuck? I'm done. Okay, let's go over to the dollar yen. All right. Oh, wait. I got to finish my analysis here. Oh, my God. I'm going to beat my head into the wall. Sully, you know better than that. Don't do this to me on a Friday when I haven't slept. Don't do it. You got me all worked up on a Friday morning. You see how that happens? Why would you do that? Why would you do that to me? 38% retracement. Okay, now if we break through 97, 66, you know I'm just harassing you. 97.70 is support. Resistance is 98.90, and if that breaks, we're going much higher. All right, dollar yen, same boat as the dollar Swiss. People don't want to be long the yen. The BOJ is trying to force them out. All right. If the dollar, this is, in my opinion, this is the cleanest trade out here. Cleanest trade out here. Right here. The reason why it's the cleanest trade out here, because if the dollar strengthens, we're breaking out of a this is how old is this channel? This channel has been in existence all of 2016. So if we break through the highs, that takes out the channel of this year. That's bullish. We break above 104 and you know, this thing's gone. It's going to change a lot about the yen in general too. I mean, I'll have to start looking at the yen saying, all right, I need to just be buying the euro yen on dips, or oh, I need to buy the pound yen on dips, or oh, I need to buy the, well, I don't think I'll ever buy the New Zealand yen on dips. Oh yeah, I'll buy the Swiss yen on dips. This right here, if we break above 104, is going to be extremely bullish. Okay, it was the high from. Now I know no one's thinking about that right now. No one. Everybody's thinking, oh, this is a dollar. We're going to have a bearish number. It's going to break. The dollar's going to break down today. It may, but if it doesn't, and we have a strong number, this dollar yen could really rip out of the. Remember, we've been in a bearish trend. How long have I been putting bearish trend on the bias chart? I think I put bearish trend on the bias chart for ever since we broke 115. Ever since we broke down here. I don't know if there's been a day, maybe there's been a day or two, but there hasn't been very many that I've had this thing at range. Okay, ever since we broke down through the head and shoulder, support through here, right? Okay, but the yen, if we break back below here, which is 102.80, 5, that's when things get bearish again. All right, and I'll tell you, this is one of those situations where I'm looking to actually start buying the dollar yen, and the thing that we could hope for today, if I can hope for anything today, is a very, very strong print or a very, very weak print. I think that's what we all have to look for. A strong or weak print. Okay, really strong or really, really weak. If we get an inline, I'm just gonna drink a lot of beer tonight, I think. But if we have a really strong or really weak print, it's going to put the dollar yen, this channel, back in play. It's going to actually reverse the whole thing here. That's how key it is, and that's why I'm keeping an eye on gold, because gold and yen also are inversely related. So if you think about that, if gold breaks down, where's the dollar yen going? I'm going to ask you that question. If gold breaks down, where's the dollar yen going? Last question, and then I'm going to put you on break, and then we got to really cruise through the last few. Yeah, if gold breaks down, the dollar yen is going up. Correct. Back in a few moments. Don't go anywhere. Maybe we'll get some more coffee. I'm going to go beat my head against the wall. I'll be right back. All right, ladies and gentlemen, this is Blake Morrow. Let's get started. All right, so let's go over to the CAD. All right, here's the CAD. We're going to work through these really quickly because we are losing daylight. Actually, it's still dark here. So the dollar Canadian hit resistance yesterday, as we had anticipated. At the 786. And right where we thought, at 3150, which makes that really key. Look, this is one of those currency pairs that I actually, if we do get a weak number, I want to buy the dollar Canadian. Maybe not today, but I'd be a buyer somewhere down here next week, down at like sub 130. Let's assume this high is good, because that 3150 is just key. So 3150 is key. All right. Okay, support. Okay. again, we're going to assume here. So the 50% retracement is going to be back just sub 130. So if we have a weak number, we could actually, push through the 130 level, stop out some people, go to the 50% retracement, which would be 129.90. So 129.90, that's just assuming that, that we have peaked. We are in a range. Now, keep in mind, I just need to take a step back for a minute. Keep in mind, one of the reasons why the Canadian has absolutely just crushed people is because we were in a situation where we looked like we were breaking down 2 weeks ago, and we hit this trend line that I don't think anybody really saw. And once we hit that trend line, it really bounced off of there. Then on top of that, crude really started to weaken, which crude, obviously looks very heavy. So that's what's propelled us all the way back up here. And the fact of the matter is, if you look at, this dollar Canadian, this is at the 786 retracement, right? The fact of the matter is, if we start breaking through these highs, I mean, we're gonna start challenging, 132.50, and that's really gonna put a hurt on people. Because anybody that's short right now, they're thinking, okay, it just can't get above here. I got short down here. It's up in my face. I can't risk above 132.50. If we break above 132.50, it's just going to squeeze so many people. But that's not for today. That's for maybe in the future. Let's go over to the Kiwi. So the Kiwi is making its way up towards 73.15. We're almost up there. 73.10, 12, whatever we said yesterday. Okay, we were here. Here, let's delete that really. Let's remove that. That's a 38% retracement. We know why it's supported there. So yesterday we were like, okay, well, how about if we see a challenge of the, underside of this trend line and the 618? Well, we're almost there. Pre-market, almost there. So now, to challenge this trend line is going to be a 786 retracement, I think. So that means we could spike all the way up to 73.40 now. Now the 618 is coming up into play, but I mean, obviously I'm not going to short the Kiwi right now because no, I'm not going to do that before NFP. If it wasn't NFP, I'd be actually selling some Kiwi right now, but it's not, so can't. So if we spike up to 73.40, I might actually try to take advantage of that today. Now support, well, not too sure where support is. I think we have to write down this number. 72.60, I think. It's not great support, it's just support. 72.60. Okay. We are still in a range. And keep in mind, guys, we're at the upper end of a channel. We're at the upper end of a channel, which I don't mind selling up here. But if it's a weak number, I'm going to have to sell it next week closer to, highs. Like, and maybe even 74 cents next week, which I don't mind doing. And I will. All right, let's go over to the Aussie. Aussie is smack dab in the middle of this stupid range in this triangle, and here, let's get rid of this flag that hasn't played out. We're really right in the apex. I mean, look at this thing. I mean, couldn't be more annoyed being right here in the middle of the apex of this triangle, okay? Um, Remember, we're coming off some pretty, you know, pretty big, tweezer top highs, creating a bit of a hammer right now on the weekly. But obviously, any candlestick you see right now can change dramatically between now and 23 minutes from now. Resistance will be 75.80. It's not too far away. So if we can get above that, we start squeezing. Support is going to be 75 cents. It's actually 74.90 from yesterday. That's a key level of support. Dollar index. So here's the dollar index. So with the dollar index, we rejected at the 618. That was key. That is going to be critical. If we have a strong number, I would expect that, like a super strong number. So if we have like let's say we unemployment drops to 4.8%, we get this 225,000 print. We're probably going to take this out. If not today, Sunday, Monday, because I think a lot of people got shook out of the dollar yesterday. I really do. All right, so they're going to be looking to reposition themselves, looking for the Fed to raise rates in September. Then that September becomes on, and then we take out that resistance. That's the 618. I'm going to delete this, so just to kind of reduce the the clutter, if you will. You can see how big this pivot is right here. It's just bump, right off there. 38% retracements right here. 95.50, 96.25. 95.50 is a 38% retracement. It's key because if we break below that, that means we're coming back towards channel lows, which then I'll be looking to play on a weak number. I'll be looking to play the dollar, if not short. I'll be looking to play the dollar long going into next week. Like next Tuesday or Wednesday. All right, 96.25 is resistance. We are in a range. Peso. All right, the peso. We have to pay pretty close attention to this. I don't think there's many people out there that think the peso can break 19. It's a 618 retracement. Historically, 19 pesos for the dollar. That's pretty, that's pretty rich for the dollar. I'm a seller up there. Anything around 19, I don't mind selling. I don't think there's a lot of people that think that the peso can break above 19. We go into risk-off mode. We might. Support right here. Still. 1865 or 1864, 1865, and 19. Okay? I think it's the same as yesterday. 18.65, 819, and that is major. And whoops, that is major, and we're in a range. Okay. Let's take a look at the Nordic currencies. So the Norwegian krona yesterday hit our resistance. I wasn't trading it, but if you were trading it yesterday or if you were watching it, we hit our resistance to a T. I mean, that's not bad. I have to give myself kudos on that. I mean, we wrote down 1840 as being resistance, and we hit or 840, and we hit 839.96. That was 4/100ths of a pip within resistance that we wrote down yesterday. That's pretty damn good, right? I'm impressed with myself. I don't usually impress myself, but that's impressive. Okay. Support. Let's get rid of that because we're basically on it. So on any real major dip, $8.26 is still support. We're in a range. Swedish krona. Sully, you're not in trouble. You're not in trouble. All good. All good in the hood. Thanks for riling me up because you know what? I was freaking tired. I slept like 3.5 hours last night, which is not good for any human being. But it just took me so long to get to sleep. It's starting to get a little cooler at night, so our AC doesn't kick on. You know what I mean? So I actually have to adjust our Nest thermostat. So the problem is I didn't have the AC blowing on me like when I was trying to sleep as much, and I think I was just kind of hot and uncomfortable. And looking back, like, when you're trying to sleep, you're not really thinking about that all that much. I think all I was trying to think about is how can I fall asleep. But 3 hours, 2.5 hours later, finally fall asleep. And then this morning I'm like, yeah, I think I was just too warm. I think that's what kept me up all night. All right, so resistance here is 860. I think that's what we had written down yesterday. Still significant. Support. $8.50 is the 38% retracement, so that'll be support today. $8.50. All right. All right. Now, I'm going to say this. We got 15 minutes till the data comes out. I'm going to put you guys on break in about 5, and we're going to take a little bit longer break because things are getting kind of nutty. I'll be back a minute or two before. Let me say this. If you have dollar exposure right now, and you're not at least 50 pips in the money, so I'm going to say this really slowly. If you are long or short the dollar and currently, and you're not at least 50 pips in the money, and you haven't taken your trade off the table, and you get hurt following NFP, it's your own damn fault. Okay? If you got 50 pips or more of profit, whether you're long or short the euro, be prepared to lose your profits and possibly a little bit more. Have that mentally prepared so it doesn't screw you up, when you're trading. It's half of trading is mental preparedness. It's being able to have that understanding of what's happening in the markets and not be laser focused on your trade. If you already know that, okay, I'm up 50 pips and I have the potential of losing 70 right now, when you're down 50 or 70, it's not going to affect you. So because you'll be laser focused on that one position that you're losing money, and then you're going to miss all sorts of opportunities, right? So being prepared mentally is more important than anything, because you're gonna jack yourself up because you're not mentally prepared to take those, losses or gains or whatever. Okay, and yeah, remember, it's a lottery today. We'll be watching the dollar. We'll be watching gold very carefully. Paul Franco will probably be back with us in just a few minutes. Good luck, everybody. I'll be back here in probably about 7 minutes or so, and when I come back, we will get ready for this.